Well, good morning, everybody. My name is Eloisa Valderas, and I work for Housing Resources. I've been with HRI. This is going to be, I think, my 23rd year. So I've been with HRI for a while. I only know the nonprofit field. When I graduated and from high school and went into nonprofits right away. So that's the only area that I've always worked in. So I worked on, in Milwaukee, the city is south side, north side, so I'm familiar with a lot of different other nonprofits and whatever. So what Housing Resources do, what we do, we're an education and counseling agency that works, as our mission statement is, that we prepare people for successful home ownership. Okay. I work on the pre-purchase side. So I work with like first-time buyers. So getting them ready to buy a house. So we do the, if you can go to the next slide, again, we're in education and we do education and advocacy. We have we do virtual seminars. We have online education. We do one-on-one counseling. And we also help with down payment assistance. Some of the grants that are available can be accessed through us, the agency, or they can be accessed through the city, or access through the lender. So we work with the people to get them ready, understanding the process of buying a house, get them ready. So they're able to go to any lender and get a loan. So we do pre-purchase, post-purchase, and foreclosure prevention. So we do the counseling for not only just first-time buyers, but existing homeowners, and foreclosure prevention. We also have reverse mortgage counseling. We do home maintenance classes. We have a tool loan center that's on 25th and Capitol for new homeowners or existing homeowners that for a membership fee have access to the tools and stuff that we have, like ladders and wheelbarrows, lawnmowers, all different kinds of bigger equipment, and also smaller tools that people can use. Some there's a rental fee, but most are free, and it's a membership based. So that tools, the Tool Loan Center, again, like I said, is on 25th and Capitol. We do, again, as I mentioned, we do the seminars. We have the virtual classes. We do 4 to 5 seminars monthly. Every other month we do 5, because then we do Spanish seminars also. So we do English and Spanish seminars that explains the process of buying a house, where we bring in our partners, our lending partners, our real estate partners, insurance partners, and inspectors. So they all participate in our classes, so that people can learn the process from the beginning until the end. And then after they attend the class, then they can set up the appointment for the one-on-one. We also have our online classes. So for some people that are not able to do the virtual classes, there is the home buying education online. After they do either the online education or the virtual seminars, then they've set up an appointment for the one-on-one. So that's where they meet with the counselor, and we review all their specifics, their credit, their income, their savings, budgeting. So that is what's done in the one-on-one. And then once we get ready to get pre-approved, then we put their file and everything together, send it to the lender for pre-approval. Once they have a house that they have an accepted offer, then at that time, then we look at what grants are available. As I mentioned earlier, some grants are able to be can be accessed through us, the agency. For example, the new city grant program that they just started like in mid-June, that $5,000 or $7,000, If they buy in a CDBG area, it's 7,000. If they buy in the city of Milwaukee, it's 5,000. We help them access those grants. And then again, when us as HRI, we also have and will be having funds for well, we call it Hickory, which is a housing cost reduction initiative, which is a grant that we get from the state of Wisconsin and that's a grant that they can access through us, through housing resource. So we help them apply.
Can they use the city's Milwaukee home and the Hickory funds?
It depends, because for the city grant, they have to be living in the city and buying in the city. So they can't
qualify. If they qualify for home,
if they qualify they could possibly use both. The only thing is that with the Hickory grant, there is a down payment cap. So for Hickory, you cannot be putting down more than 10% down payment. Okay. So you could possibly use Hickory and the city grant depending on what the requirement for the down payment is.
Okay, got it. Thank you.
Yeah, some grants you can layer, and again, us as counselors, we look at those situations on whether they meet the requirements, because again, you could be meeting the requirement of the city grant, but then not meeting the requiring for the Hickory. And then there's also other grants. There's like grants that come from the lender, which is down payment plus. Those come from the lender that are part of the Federal Home Loan Bank out of Chicago. Okay, so there's different grants that are available, and us as counselors, we try and work with them. Okay, so if we have several offices, so if you want to, we have an office in Racine, we have an office in Waukesha, we have the Two Loan Center, we have our main office that's on Burleigh. I am at the Southside office. We have different, locations and stuff for and counselors at different cities in that. So we try and be available and accessible to to people that want to buy wherever they're going to buy. If they're going to buy in Waukesha, Racine, Racine covers Racine and Kenosha, Waukesha. And then we also just started doing some seminars in Madison, the Dane County, for Dane County. But our main office, again, like I said, is at 78th and Burleigh. We have the office in Waukesha. We have the office in Racine, the Southside office, and the Two Loan Center. Okay. Getting into the credit savings and budgeting. Again, so what we talk about, it says, what determines a FICO score and the importance of savings and budgeting. When after the people go to the seminars that they meet with the counselor, then what we're going to do then is pull the credit report, okay? And review the credit report with them and also the score so that they understand the impact of credit, how they pay their bills or not, how they save or not. So we talk about credit, we talk about savings, and we talk about a budget. We go through that whole process with them, and based on their credit, their income, their savings, and then we look at the budget to see what they're able to do. If there's issues on the credit side, then we will develop an action plan. That action plan identifies what are the barriers, or are there barriers? If they need savings, if they need to increase their score, if they need to take care of collections, that action plan identifies what they need to do. Okay, once all of that is done, and we're working with the client, we're meeting with them by phone. Right now, we're not doing any face-to-face, but we're meeting with them, emails, so we're trying to help them stay on track and following that action plan. Once they've accomplished whatever it is that was developed on the action plan, then at that point, then they're ready for pre-approval. So then we will then gather all their documentation and prepare their file to be submitted for pre-approval. We talk about in the seminar and also in our one-on-ones, we talk with them and we talk about different loans, conventional loans, FHA loans, VA loans, and ARMs, adjustable rate mortgages, so that they understand how those loans work. And then they decide, okay, we give them information, we have information sheets from most of the lenders so we are familiar with what credit scores they're looking for. We're familiar with their type, what either conventional loans or their FHA, because we know what the client's scores are, we know what they're looking for. So we give them information sheets on at least a couple of different lenders. In most cases, I saw that somebody had a question regarding, what is a good score, okay? And a good score for most lenders, okay? Now there's some lenders that are okay with a 620 credit score, all right? But a lot of lenders are changing, Most lenders that we're dealing right now, they're looking at credit scores of at least 620 or 640. A 640 credit score, most lenders are going by. But again, that depends on if you're looking at a conventional loan or you're looking at an FHA loan. An FHA loan tends to be a little bit more flexible. So an average score for most people, I would say at a minimum, 620. Okay, are there particular lenders who have been more supportive of working with you than others? Yes, most lenders, most of your traditional lenders are our lending partners, okay? What we're starting to see more of now is more mortgage companies, that we really, we work with all lenders, but some mortgage companies are fairly new. So we're starting to get, more familiar with them. But yes, most of the lenders are our partners. A lot of lenders have created first-time buyer products because, so they've developed their own guidelines, and we try to have up-to-date information. So we have meetings, that where we bring in our lending partners so that we get up-to-date information on what if they're making any changes, what's going on, whether they still have grants. So we're up to date in most information. But yeah, most of the lenders are our partners and are very supportive of the things that we do in most cases. From beginning to end, how long is the process? What is the loan amount for a 620 credit score? From beginning to end, it depends, because some people, because we work with everybody, some people have, unfortunately have credit issues and have low income. So we sometimes work with them. It might take them longer. On an average, if you have a person that has a 620 credit score and has savings for their down payment, you could be looking at maybe, 90 days, maybe 6 months. So it depends. A 620 credit score is not really, your score is not going to really determine your buying power. It is going to be your credit score, is going to be your income and your down payment, okay? That's your buying power, because when you're looking, you could have a 620 credit score, but you're in a fixed income. Maybe you're only getting $1,000. Well, that $1,000 might not, in today's market, might not get you $120,000 loan. So your affordability is going to depend on your income, your debt, okay, and your down payment. Okay, so so that's why when we work with the client, we look at what is their income, what is their debt, what's their savings. If in some cases we might need them to lower or eliminate the debt because to allow them to be able to increase their affordability. So it depends on the whole picture for that client to be able
Lois,
to.
I did want to give you just a heads up that we've got about maybe 5 minutes.
Okay, all right.
Thank you for taking all the questions too.
No problem. And that's what I meant to say was to ask questions. But anyway, so what we look at then after when we meet with the person and stuff, then we, again, as I mentioned, we look at what grants are available, because grants are not guaranteed. Some grants, as I mentioned before, come from a third party, or they come from us. In some cases, the lenders have their own grant programs that might be more connected to the property that you buy. So if you buy in a lower moderate census tract, you might still qualify for some grant assistance through the lender that might not be necessarily income driven. Okay, most of the grants are income driven. Okay, so they are first come, first serve. They are for down payment and closing costs. In most cases, the client has to have a minimum requirement. In most cases, it's at least $1,000 of their own money. So for there, as I mentioned before, there's Hickory, there's Down Payment Plus, and the Milwaukee Home DPP, which is the city grant. So we help them access grants, but because grants are not guaranteed, that's why we always tell people, you need to be prepared to buy your home with or without any assistance, okay? Because you don't know whether you're going to get a grant, and you can't include the grant that you might get in the purchase price, because you need to be able to afford that house. So that's why we work with the client to get them, ready to that point. Working with HRI when shopping. No, when you're working with with housing resources, and the credit, when we pull your credit report, it's a soft touch, because we're not looking at your credit to give you credit. So it doesn't impact your score. And it doesn't, it won't affect the inquiry, and it's not going to impact your score. Student loan debt. Okay. Well, on the student loan debt, that's a crucial one, because lenders are not excluding student loans anymore. So what they're doing is that in some cases, some lenders take 0.5% of your total debt as a payment. Some take 1%. Some lenders are going to 2%. So if the client is able to get a payment letter that shows a payment, then in some cases the lenders will accept that payment letter. Okay, and even if it says zero payment, so it's up to the lender. But student loans are not excluded, anymore. And even though right now there's no payment required, lenders are going to total the student loan debt and take 0.5%, 1%, or 2% as a payment. Okay. Again, okay. It's not going to hinder your ability to buy a house. It's going to hinder how much of a house you could buy. That's where the debt comes in. That's why, having credit cards and loans and, or several credit cards. I mean, it's okay. There's nothing wrong with credit. The issue is how we use it. So at some point, and again, when we're doing the counseling, we're looking at, if you have a car payment and you're going to have a student loan and you're going to have a house payment, can your income handle all of that debt? Because even though you're not paying the student loan right now, at some point you're going to have the possibility of having a student loan payment is going to be there. That's why lenders are, factoring it in. So it can hinder you in how much of a house you could buy. Okay. Steps after you, again, the steps that we recommend for people is, again, the class, the education. Okay. Because then once you do the education, you're going to meet with the counselor, and then we're going to work with you so that you can get pre-approved. When you get pre-approved, we're going to give you a resource page that's going to include realtors, inspectors, insurance agents, so that when you need those partners, they're there to help you. The realtor is going to, help you with your, get your accepted offer, help you find your home. Once you have an accepted offer, then you're going to go back to your lender and complete the loan application. You're going to we always recommend that you do a home inspection, get an appraisal, you're going to get loan commitment. You're going to insure your house, and you close. Obviously we want you to change the locks, and you celebrate. These are the steps from beginning to end. Okay. And I think that's my time is up. And okay, and then any questions that I can answer before the next one starts. I hope that I was helpful in that.
Yeah, I thought it was great, and I would like to connect afterwards because I think I could have a million questions. So.
Sure. I think that I'm not sure whether if Myra, do you have if you have my email and my phone number, feel free to email me or give me a call.
Yeah, I will go ahead and share that when I after the meeting, when I share all the slides, I'll share Eloisa's information.
That would be great. Yeah. And feel free to call me and refer people if you want more. We do I've done different seminars with different other organizations and lenders and that. So if there's a need for coming to your program and explaining things, I am more than willing to do that.
Well, thank you. I had a lot of questions for you, so you answered all of them. I'm a new NSP coordinator. Well, again, this time in the Mirror Park area, and I will be calling on you guys to help organize some of the residents around home ownership in the Mirror Park area. Thank you.
Sure.
And I'll just add, that was really, really great, Eloisa.
Yeah.
I think the questions that everybody had are emblematic of why we had a housing counseling agency kick this off. They really are sort of the go-to and the first referral that we encourage people to make if somebody comes to you and says that they're interested in home ownership, because they're really that guiding light. They'll hold your hand for, as Eloisa noted, sometimes it's quick, sometimes it takes months or even up to a year, but they're that person checking in with an individual because it's just so complicated. And a home is one of the biggest purchases, probably the biggest most folks will ever make in their life. So it's really important to have one of those HUD certified counseling agencies working with them. So, and as Myra said, we'll share contact information after, because the other point of these meetings is for you guys to put faces with names and make connections, so you have somebody to reach out to specifically when there are any questions. And also some of the programs that the city talks about require working with the housing counseling agency too. So we just wanted to make sure that you guys were aware. And I'll drop in the chat a little bit later information that's on our website that lists all the counseling agencies in the area, because there are 3 additional ones that you can refer folks to as well.
Correct. And we work with them also.
Yep.
Awesome. Well, thank you so much, Eloisa. And then I'm gonna, kind of in the interest of time, move over to our next presenter, which is Ben Sanchez. He is with the City of Milwaukee's Department of City Development, particularly with the NIP, not NIP, NIDC division. So Ben, if you want to just kind of take over, and then I think you should have access to presenting. So whenever you're ready, you can take over.
Okay. Good morning, everyone. I'm Benjamin Sanchez. I'm with the Neighborhood Improvement Development Corporation, and I recognize many names. Either I've worked with you individually fixing your home or buying a home, or I've worked with you as a partner throughout the years, and I appreciate your time. I hope that my presentation helps you help other families and individuals either purchase, fix, or invest within their community. And for the sake of me reading my slides, I'm going to turn off my video for a little bit, and then I'll be right back on, okay? Okay, can everyone see my slides?
Yep.
Okay, so again, I am a housing program specialist with the city of Milwaukee, and the department I work for is a Neighborhood Improvement Development Corporation. Within the Neighborhood Improvement Development Corporation, we're within the Department of City Development. So we work and are housed under the Department of City Development. Our main purpose is to create programs that can help neighborhoods flourish, and also investors invest in neighborhoods and beautify neighborhoods as well. We do have multiple programs. I can tell you that on average, we have about 10 to 15 programs. They change regularly. Some of our most important programs are the ones I'm going to focus on today. The first one that we have is the Home Buyer Assistance Program, and that's for individuals that are looking to purchase a city-owned tax foreclosure. I'll talk about that a little bit more in detail. We do have the Milwaukee Home Down Payment Assistance Program, as Eloisa had mentioned. That is a new program that just launched relatively about probably the end of June. We have the Strong Homes Loan Program. That's probably one of our most popular programs available throughout the portfolio. We also work with the Rental Rehabilitation Loan Program and Targeted Investment Neighborhoods. The Home Buyer Assistance Program provides funding to help prospective homeowners rehabilitate foreclosed homes that they will occupy as a primary residence. We have fully forgivable second mortgage loans of up to $20,000 that assist eligible home buyers with the rehabilitation of city-owned foreclosed homes. The home buyer assistance is limited to no more than 1/2 of the total cost of the purchase and rehabilitation of a property. Now, we do indicate $20,000 here, but we do have about 3 or 4 subcategories of this program that can go all the way up to $25,000. And that would be if the property is located within a targeted investment neighborhood, it can qualify for up to $25,000. If the property is going to be purchased as a duplex converted to a single family home, we have a live work duplex conversion program. So there's a couple of different programs within this particular program. There are some steps associated with this program. I really wouldn't focus that much on the steps, but the main important part, as Amaida and Eloisa mentioned previously, is that you need to first start working with the home buyer counseling agency. That's the first step. The counseling agency can get you pre-approved through a bank if you're trying to seek a loan, or if the individual or family is trying to do this as a cash transaction, we can work with that individual or family as well. They would work with then a real estate agent, make an offer to purchase on a city-owned tax foreclosure. And at that point, once the offer has been fully accepted, is when they submit an application to the Home Buyer Assistance Program. We do offer technical assistance. I'll talk about that a little bit more in detail. We then close on the purchase of the home and the loan program funds, and then the work starts. And after the work is completed, then the prospective homeowner can move into the home. The Milwaukee Home Down Payment Assistance Program. This program provides forgivable loans or grants between $7,000 and $5,000. So the maximum is up to $7,000. The grants are available on a citywide basis up to $5,000. However, if an individual is purchasing within the community development block grant area, we do provide assistance up to $7,000. And the counseling agencies throughout the city of Milwaukee, there are 3 counseling agencies that are administering these funds. So Eloisa from Housing Resources is an example of one of the counseling agencies that is administering the funds. And there is also the United Community Center on the south side. and there is Axe Housing, and they're on the north side. As Eloisa indicated previously, Housing Resources has multiple offices throughout the city of Milwaukee. The home must be purchased for owner occupancy, and the buyer must live in the home for a minimum of 5 years to qualify for the down payment assistance. And the buyer may not have owned a home within the last 3 years to be considered a first-time home buyer. The buyer must complete the 8 hours at minimum of the HUD-approved counseling. There are income restrictions and other requirements related to the program. As Eloisa indicated, some of these programs can be matched with other grant sources. The counseling agency will make those determinations to make sure that they can be matched, or if they cannot be matched, they'll explain the reason why. If you're interested in more information about this, you can visit our milwaukee.gov/MHDPA, and we have all of the details regarding the program there. The Strong Homes Loan Program, as I indicated earlier, this is our most popular program throughout the city of Milwaukee. This is the go-to program. It is the last resource program. As Eloisa indicated previously, as well as some individuals do have credit issues and concerns, or they may not have equity in their home. And this is predominantly for existing homeowners. We do not offer this for a homeowner that's purchasing a property or that just recently purchased a property. There are partially forgivable loans for emergency and essential home repairs. It offers up to $20,000 for an individual that owns and occupies a single family or up to 4 family unit property throughout the city of Milwaukee. It is available on a first come, first served basis. The property must be owned for at least 12 consecutive months before the applicant can apply. They must be current on property taxes, must be on an existing repayment agreement for any utilities. They have to have their mortgage on time, and they have to income qualify and credit qualify. We do look at credit. I can tell you that I'm not going to go into detail about all the specifics about what we look at, but you can definitely visit our milwaukee.gov/strong loans for further details. It does again go into specifics as to what we look for. The main important part to understand under this program as a community partner is you're going to have individuals and families indicate, hey, I can't get a loan, my roof is not working, or my sewer lateral collapsed, or I have a gas leak, or my furnace went out. Those are some examples of the major issues that we deal with. The other issues that we also work with are any code violations, code compliance violations, but Keisha is on here as well. She's going to be talking about the code compliance loan program. But we can also cover some of those issues that may be a potential code violation before it becomes a violation. So this program, again, we do, I can tell you we've had this implemented since 2014. We've had over close to 500 loans closed, and we've invested within the city of Milwaukee over $8 million in Strong Homes Loan Program funding as it is. The positive is that if there is an individual that's elderly or disabled that's on fixed income, we do offer the loan as what we call a deferred payment loan. They don't have a monthly payment. There is no interest on this loan. And that is the individual or family that we typically most see that are able to access our loan fund because they're not able to access the funding through other financial institutions due to their limited resources. The other positive is that if an individual does qualify and is a payback loan individual, as they pay their loan back, that money that they pay back is used for other individuals that are trying to seek out loans. So it's used as a loan pool. So we constantly replenish that loan pool for other families that may need to access this program. As a community partner, another piece of information that would be valuable to you, and we would definitely want to promote this within your community, is a rental rehabilitation loan program. Let's say I am an owner of a property within the city of Milwaukee, and I want to purchase another property as an investment property. We do work with responsible investors that are looking to invest in the neighborhood, and we ideally would like to see an investor that is from Milwaukee investing within Milwaukee, as opposed to investors coming from out of state. Doesn't mean that we don't work with out of state investors, we do, but we would like to definitely see a growth of investors within our community investing within the city of Milwaukee community. We do have different programs for the rental rehabilitation program. We have the program that's available for individuals that are looking to purchase tax foreclosures through the city of Milwaukee that they're not planning on occupying. And we have programs that are designated within specific targeted neighborhoods for owners that already own a property within a designated targeted neighborhood. Generally, the property needs to have at least 2 bedrooms. We are going to look at the investor's debt in comparison to the value and cash flow of the property. We do provide up to $14,999 in forgivable money. The owner must provide at least 1 matching dollar for each dollar that we invest. I'll give you an example. Let's say I want to purchase a duplex property, and the property has 2 units in each 2 units, and then each unit has 2 bedrooms. And let's say it costs $60,000 to fix that property. That means that as an investor, I would only need to invest close to $30,000, and us at Neighborhood Improvement Development Corporation will invest the other close to $30,000 to help you fix that house. As an investor, what does that investor need to do? They need to rent to families that are income eligible below the 60% area median income. And the rents need to be affordable. There are limits on the rent caps. And the goal of this program is to create affordable housing within the city of Milwaukee for individuals that are low to moderate households. Some of the priorities of the program, we look at exterior repairs, kitchen and bath, and other rehab projects. We look at plumbing, electrical, heating, energy conservation, weatherization, lead abatement. Those are some of the things that we look at with this program. There are 2 different sources of this program. I'll focus on the one that's non-federally funded, which is the program expansion. And that's for individuals that are looking to purchase a city-owned tax foreclosure. And on the next slide, I'll focus a little bit more on the federally funded program that's funded by the Community Development Grant Administration. For more information regarding this, you can visit our website at milwaukee.gov/rental rehab loan. So what are targeted investment neighborhoods? Many of the participants within this particular call may already be part of a targeted investment neighborhood. And if you're not, this is a good conversation point with your alderperson or anybody that actually represents your particular neighborhood to see if you can become part of a targeted investment neighborhood. The Targeted Investment Neighborhood Initiative is designed to sustain and increase owner occupancy. It provides high quality, affordable rental housing, strengthens property values, and improves the physical appearance and quality of life of neighbors and neighborhoods. The TINs focus on resources for 3 years in a small area. Generally, it's between 6 to 12 blocks of an area. That area typically does change every 3 years. The funding is allocated for that area for that 3-year period of time. And the money is used to help fix homes. There are 2 focuses of the Targeted Investment Neighborhood. The first one is the TIN loan program that helps individuals that already own a home within these particular designated neighborhoods. There's 8 this year. And an example of this program is that it provides a 0% interest rate loan up to $15,000. And there is a match portion of $15,000 in the form of a 5-year forgivable loan. So if an individual is looking to owns a home within the targeted investment neighborhood, they're looking to fix their home. And the reason I'm going to clarify this is because the NIP program exists within the Department of Neighborhood Services as well. If that individual is above the 60% area median income, but below the 80% area median income, which means that they're a little bit higher income, they don't qualify for NIP. This is a really good program for that individual because of the fact that they can get half of their repairs fully forgiven after 5 years, as long as they live in the property for the 5-year period of time. The other portion of the program is the rental rehab. Again, this gets really confusing because it's the same name of the program, but it's for investors that already own properties within the neighborhood that's designated as a targeted investment neighborhood. And they're looking to fix their properties for their tenants. And that program, again, we talked about that it provides up to $15,000, $14,999. The investor needs to invest at least that same dollar amount before we invest our dollar amount. And the same requirements as I talked about before. If you're interested in learning about what exact neighborhoods exist, you can definitely visit milwaukee.gov/TINS. And we have a list of all the map areas that are available with the boundaries. The biggest asset that we have compared to other departments, such as NIP, is that we have rehabilitation specialists on staff. We have a total of 5 rehabilitation specialists. As you see the last line, services are free to the potential home buyer, homeowner, and investor. You don't see that anywhere. Typically, if you are seeking rehabilitation services, that cost of seeking a rehabilitation specialist can cost anywhere between $1,500 to $5,000 in any market. This is a positive. The individual does not have to pay a single penny for that particular service. We perform a thorough inspection of the property, develop a scope of work to define what needs to be done. We help the buyers, the homeowner or investor with the bidding process, with making information publicly available. We perform inspections throughout the work to make sure that the work is done correctly. We help the homeowner gather all the correct documentation, such as payment forms, lien waivers, and receipts to pay the contractors for work that has been fully performed. The biggest obstacle that I hear with many homeowners that are applying to our programs that are hesitant, I hired a contractor, the contractor ran off with my money, and because I paid them up front. We do not pay anyone up front. We make sure that the work is done, that it's done satisfactory to the homeowner before funds are released. And again, that's the biggest asset about working with our programs here at the Neighborhood Improvement Development Corporation. Our contact information, if you have any homeowner or potential investor or potential home buyer that is interested in learning more about our programs, is 414-286-5610. Our main email address is NIDC@milwaukee.gov. Our main website is milwaukee.gov/NIDC. I would highly encourage that if you are a community partner that is actively engaged with social media, you can follow our social media platforms such as Facebook, Instagram. We also have Twitter, and highly promote these programs through your social media feeds, through your Facebook or through your Instagram or through your Facebook Live events, if you have Facebook Live events. If you need us to come on and talk to your constituents or to your families that live within your neighborhood, invite us. We're more than happy to be available to answer any questions directly to your families and or investors or individuals that are experiencing emergencies on a daily basis. We are available for the public. Thank you for your time. And if you have any type of questions, I can answer those at the end of the presentation so that we can keep the presentation moving forward and other presenters can provide their information. And I, again, appreciate all of your time and consideration. And I look forward to working with many of you within the next upcoming weeks, months, years ahead. And congratulations, Maida.
Yes, thank you, Ben. Yeah, and there are 2 questions, so we'll kind of hold on to those for now, and then again, we'll send out Ben's information as well. So we'll move on to Keishla.
Share my screen. Okay. So my name is Keishla Ortiz Delgado. I am the Compliance Programs Coordinator for the City of Milwaukee Department of Neighborhood Services. So I'm going to go over the compliance loan program. So some of the requirements for the compliance loan program is it's for owner occupied single family or duplex homes. The income limits are here on this chart, so it is an income restricted. So it's for low income families. In order to qualify for the program, you have to be fully paid on your property taxes or on an approved payment plan as well. That's with your utilities, and be current on your mortgage as well. And you must have observable code violation orders. So the important thing here is you don't need to have a code violation on your home to qualify for the program. It just needs to be observable. And so what that means is when an inspector goes out, they just need to see that something needs to be fixed, which if people are applying for the program, usually means something needs to be fixed. So you do not need to have a code violation. So some of the benefits for our housing repair program is that it's up to $15,000 in a deferred payment loan. So what that means is a zero interest, zero monthly payment loan. The loan gets paid back upon sale of the property. So if you do not sell the property, it just stays on the property indefinitely, and you'd never have to pay it back until you sell. If you pass away and you transfer the property to a direct descendant, a child or grandchild, they get the same deal. And they would have to pay back the city at the time that they sold the property. Similar to what Ben was saying, one of the benefits to going through the compliance loan program and the city programs is that we have City of Milwaukee approved contractors. So you do not have to go through finding contractors for the work. We have contractors that we work with directly. We work with them for more than 5 years. They're great contractors. And as well, all of our work is inspected before it begins, while the work is being conducted, and there's a final inspection as well. So a city building inspector will manage the project for you, making sure that everything is done up to code and correctly. In addition to that, similarly, we do not pay anyone out until the DNS building inspector has signed off that the work was done appropriately. And we also pay the contractor directly. So the department pays the contractor directly, so the homeowner doesn't have to deal with that either. And so some of the goals for the compliance loan program is to provide funding to low-income homeowners to abate observable code violations. We want to keep homeowners in their homes. And so we want to reduce the number of properties the city takes in tax foreclosures. So we really just want to, those long-term homeowners that are neighbors that are anchors to their neighborhoods, we want to make sure that those people stay in their homes, even when they can't make essential repairs. So our most common applicants are going to be a lot of elderly individuals who have owned their homes for a long time, but unfortunately, since they're only getting Social Security income, they just can't maintain the home. So this program helps them to make essential repairs. And so it's a citywide program. So we work throughout the city of Milwaukee. So the little blue dots are the projects we did from 2014 to 2017. And then this is just an example of one of the homes that we were able to fix. So this compliance loan program does exterior home repairs. So some of our most common repairs are roofs, sidings, porches, railings, and you can see how much the changes the way the house looks. And so the only things you really need to apply for the program is you'll need the application, you need proof of income, and you need a copy of your most recent electricity bill. Once you submit those 3 things, you can get the process started to begin the application process. Something else I want to mention is, for homeowners that do have code violations, it is a benefit to apply to our program. Since we work in the department that has the building inspectors, we can actually put a hold on those orders so that homeowners aren't being fined for reinspection fees, which do come up once you do get an order. So if you do know homeowners that are getting orders, immediately refer them to us because we can hold the orders so that they're not getting fined for while they try to make the repairs. And then this is our CLP contact info. So you can find all of our information at milwaukee.gov/CLP. And then our main phone number is 414-286-2567. And then our main email is clp@milwaukee.gov. And then this is our address where you can mail in your application if you print it off on our website. And then just as well, if you have anybody that speaks Spanish, this number goes directly to me. So I'm bilingual, so you could send over anybody in Spanish as well. Okay.
Thank you so much for presenting, Keishla. I just wanted to, I guess, give this time to both Ben and Keishla. If anybody wants to ask any questions, we have maybe like 2 or 3 minutes. I know there's one in the chat, and then we can kind of, move on maybe like in 3 minutes or something like that.
Yeah, I have a question, and this question first is for Keishla. Keishla, how long is the process? Because I have a resident and they fit in the category of, they're elderly and they do live on a fixed income, and they've been working through, I think it's the community program, and they haven't heard anything back from an application for it's been over a month. So how long does this process take before they could start to hear anything and they have all their paperwork turned in?
To us or to a different
Community? They're working through Community First.
Oh, okay. Well, for the CLP program, once you apply, I would say the entire process from beginning to end is probably going to be like a 3.5 to 4 month process. But when you initially apply, it only takes a few days to review your application. And then that application is then sent to a building inspector that would go out to the property, and they would create a scope of work. The scope of work may take anywhere from a week to 2 weeks. I usually give people. After the scope of work is completed, the scope of work with their full application goes to a loan committee, and the loan committee decides whether to approve or deny. So once you hit the loan committee, which is you would know whether you were approved or denied. If you're approved, you would have to wait 2 to 3 weeks for a bid from a contractor. And then we would do a loan closing, and then the construction would begin. So it's kind of, I would say, about a 3 month process, but we would definitely be communicating.
Okay, and the second part of that question is, can the resident work directly through your department, or do they have to go through another agency to access you guys?
No, CLP work. You call me directly and you work with me directly.
Okay. Okay. Thank you, Keishla. Hey, Ben, how you doing? I work with Ben on my own personal property.
I remember.
Yeah, Ben, my only question for you is, can you combine the two the two rental rehab loans, the federal one and the one through you guys?
No, because one is for individuals that are looking to purchase city-owned tax foreclosed properties. And the other one is already for individuals that already own properties within designated targeted investment neighborhoods. So they're totally different programs.
Okay. And
there was another question.
Yeah, I'm done.
There was another question that I saw about Clark Square, Silver City. It came from Gabe. I don't administer the grant periods of allocations, but the person that does is Angela Mitchell Reed. So if you have specific questions as to when a particular neighborhood is expiring, you can definitely reach out to Angela directly. If you need her contact information, I'll plug it in the chat for you to contact Angela directly. And that way you can kind of figure out when those particular neighborhoods are expiring. If your neighborhood is close to an expiration date and you are the representative of that particular neighborhood, let's get on top of promoting it as much as possible so that we can get funding out, because once that neighborhood closes, the neighborhood typically tends to move to a different 6 to 12 block radius.
So I did just,
Go ahead.
did
No, I was
just-
just gonna say that there is a question from Shiraka. So whenever you get a chance after you both are done, maybe take his question.
For Keishla or for me?
For anyone in general, I guess I can put it to Keishla. I know she was about to say something, so go ahead.
Oh, I was going to answer Joanne's question in the chat. I was just going to say, so we do try to proactively provide information to homeowners via the inspectors. So the inspectors are probably our like first line, because usually someone has called in a complaint on someone's home. The inspector goes out. The inspector is required to write an order, but usually they have to talk to the homeowner at some point during that process. So they're the first ones to know whether the homeowner is really going to even be able to make that repair on their own, or if they just do not have the means to do that. So all of our inspectors know about the code compliance program, and we provide them with brochures to give out to the homeowners that do have orders, so they can call me directly and get that taken care of. In addition to that, you know, anyone that's like headed to court because they're that behind, we also try to pull them and see if we can still help them, even if they are like that far into the process.
And from, I guess, one thing that was asked by Bobby that I think kind of helps to understand the city of Milwaukee perspective. I know that many individuals that work within the community have a specific designated contact, and that contact may be constantly bombarded with questions like, where's my application? Where's this? Where's that? Imagine that same basis when either Keishla or myself or anyone within the city of Milwaukee receives calls. We deal with everyone at the city of Milwaukee level. That means that everyone throughout the city of Milwaukee is contacting us from all the aldermanic districts. We receive a very large volume of applications. As an example, I'll just give you an example of my case. As of this Monday, I received 10 new applications that were assigned to me, which means that I look at those 10 new applications to review who is eligible and who is not. That's on top of the 40 plus cases that I'm actively working that are at all different levels of the process of fixing a home, buying a home, or investing in a home. So we're looking at new applications on a regular basis, plus working with our existing client base. So your patience is greatly appreciated. Please note that we're not just twiddling our thumbs, we are busy.
Yeah.
I hope that helps a little bit.
Yeah, I definitely know that, you know, you guys are there as a benefit to help, and you have, and the city of Milwaukee have been, you know, for the most part, very helpful with residents that I brought to the various agencies programs. Just was asking that question because I sometimes feel like when you have a go-between, a middle agency is lost in translation with not being able to get back to the resident. And I do find that having a direct path is a little bit better.
Yeah, you can definitely contact us directly to find out, hey, what's the status of the application. We get that on a regular basis. We get that from many of our community partners. Hey, this person submitted an application, where are they? And as an example, I know Keishla works on her own cases, but we work with a larger staff. So if I'm not the right person that can answer that question, I will direct you to the right person that can answer that question.
And I know that personally, Ben, you've been very helpful with me.
Any other
Awesome.
questions?
Do you wanna go ahead?
Oh, I just said any other questions.
Yes.
Yeah, I think Shiraka had one, and then I'm gonna go ahead and bring up the next presenter slide so that right when you're done with that, we'll move into Emmett's presentation.
Yeah, so my question is, there's been a common thing with some of my residents who live right next to vacant lots. And this may be outside the scope of this presentation. And that creates safety issues in terms of they're in between a vacant lot and another house and people are cutting through at all times of the night. Some of them have bought the lot but don't have the resources to build a gate. Do you know anywhere where we can find that? And if not, that's okay.
I'm not fully aware. Ben, do you know anything?
So as a community organizer, one thing that's very important now, again, I will include the contact information for Angela Mitchell-Reed because she's probably going to be the right person to speak with on this. We do offer community improvement project funding. So let's say there's a vacant lot that's not owned by an individual, that's possibly a city-owned vacant lot that is a nuisance in any way, shape, or form. One, we can, as a community partner, work with you as long as you are working with the community itself to create positive spaces that potentially could help improve the neighborhood. Community gardens or spaces where individuals tend to share areas, a space where individuals may want to create art. So if there are certain things that you see that are problematic and you're looking to kind of make a positive impact within that space, and as long as it's a city-owned vacant lot, you can definitely contact us for community improvement grant programs that exist. It's a match program of up to $4,000. And that helps beautify any spaces that are potentially kind of problematic. And again, it's just mainly city-owned vacant lots.
Thank you to both Ben and Geishla, and I'm glad everybody was able to kind of take advantage of the space to ask questions. I'm going to move forward and pass it off to Emmett at HRI, who's going to talk about the sort of the next steps after you closed on your home.
Hi, thank you. So I am the home retention manager with Housing Resources. What that means is basically anyone that comes to us that already owns a home falls under one of the things that I take care of. That includes, as Eloisa mentioned earlier, foreclosure prevention counseling. I do reverse mortgage counseling. I also am kind of the director for the Tool Loan Center, although I'm not generally at the Tool Loan Center. That's run hands-on by Tracy Polk. I'm kind of oversee the process there as well. I am moving a little bit out of more direct counseling work. I still do the reverse mortgage work and a bit of the foreclosure work, but I'm kind of transitioning out of the direct counseling work more into a supervisory role. But we do have new staff that is handling the foreclosure work. The things that I wanted to talk about today and make sure that people are aware of, but first and foremost is the foreclosure rescue program, the mortgage assistance program that we have. That program was recently extended. If you're aware of it, you may have heard that it was scheduled to expire in June. It recently was extended through the end of the year. And what that program does is makes direct financial assistance in the form of mortgage payments available to people who are behind on their mortgage because of a COVID-related issue. So if they lost their work because the job shut down due to the COVID lockdowns, or if they were self-employed and lost business, or if they just had to be home to take care of kids who were homeschooling, we can provide help and help them get caught back up with their mortgage. We make the payments directly to the mortgage company. To date, we've paid out about $2 million in mortgage assistance directly to mortgage payments. We have just under $1 million left to spend by the end of the year. So if anybody knows anyone that's struggling with mortgage payments because of COVID, please refer them our way. And the nice thing about it too is if because we're kind of moving out of the pandemic issue, if they struggled with an issue but they're back at work now, they still may qualify because we're looking at the triggering event, not necessarily where they are right now. So if they're in a forbearance or struggling to get caught back up, please have them contact us and we can see what we might be able to do with them to try and get people caught back up on their mortgage payments. It's a really kind of a unique and special program. We don't oftentimes get direct assistance programs where we can actually give money away. That's something that people always ask about, and very often we don't have that, but we do have that now. So we're really excited to be able to take advantage of that and get that money out to people who really need it. The other things that I wanted to touch on, and some of the things that I'm seeing that are sort of causing me a little bit of concern, is in terms of foreclosure or coming foreclosures. There's a lot of ingredients right now that we're seeing that are similar to things that triggered the mortgage collapse in 2008, and it's concerning. And I think we've learned a lot of lessons from what happened in 2008. And one of those things is to get ahead of the problems when we see them coming. And that's one of the things I think is really important to stress. So the things that I'm seeing that are concerning, first, a lot of people struggling with payments because of COVID. There's a lot of people that are still on forbearance. And what happens with the forbearance, the issue with the forbearance is it just defers payments. It means you're not having to make a mortgage payment right now. But those mortgage payments that you're not making will eventually come due and have to be paid. And what needs to be done in order to pay those is usually a loan modification. And what we're finding is that getting those loans transitioned from forbearance into modification is not going as smoothly as mortgage companies promised it would go. It's not really a surprise, but it is an issue for a lot of people that are trying to get out of the forbearances and back to paying, and they can't. So that's a big issue. And that's something that we can help with directly, dealing directly with mortgage companies to help negotiate those workout plans. The other things that we're seeing that really kind of concern me is with the really hot market for homes, we're seeing a lot of people pay over asking price. We're seeing a lot of people do things like waive inspections, waive inspection contingencies. And so that is, whenever we see those things, it's really kind of a red flag, because that those can create issues in the future, especially with the deferred maintenance issues with a home inspection. If you get into a home and you don't know what's wrong with it, and something major happens, 6 months, year, 2 years down the road, that the ability to cover the cost of those repairs can really jeopardize your ability to make the mortgage payment. And so that's a concerning thing that we're seeing for a lot of people. Also, this issue with paying more than the house is worth, or more than people are asking for. That always, can create issues down the road with being underwater on the mortgage and struggling with transitioning or refinancing or doing anything with that house in the future. So those are kind of red flags, and those are things that we really want to stress with people in the education to understand what kind of issues those can create down the road. The other thing that's really concerning me, directly related to this page here, is escrow issues. So with the mortgage assistance program, I'm seeing lots of people with really big negative escrow balances. And that's largely because people haven't made a mortgage payment in over a year. They haven't been paying into the escrow to cover the taxes and the insurance. But when those bills come due, the mortgage company is still paying those bills, and they're just basically tacking that debt on. So we're seeing people with $2,000, $3,000, $5,000 escrow deficits. And what's going to happen with those eventually is those mortgage payments are going to have to go up to pay back that escrow deficit. And that's going to put a lot of people in a situation where they can't afford that new higher mortgage payment. So what we're trying to stress with everyone with escrow issues, if you have an escrow deficit, If you see the escrow going up, and especially with property reassessments last year, a lot of people's property taxes have gone up quite a bit. That's putting a lot of pressure on mortgage payments, causing mortgage payments to come up. And escrow issues are a tricky thing to deal with. And that's something that we really want to try and get out there and help people try and prevent that from being an issue. Once that escrow deficit is there, it's a tough thing to roll back. But we want to make people aware of these things, that these things are coming, their payments are going to go up, and we want to have a plan for how to address those payments when they do go up. Because I have a fear that a lot of people are going to get priced out of their mortgage payment over the next 6 to 12 months. And so if we can prevent that before it happens, rather than try and fix it after it happens, and much rather prevent the problem and try and fix it later on. So those are the big concerns, the big things that I'm seeing, and things where I see that I feel like foreclosure is going to be an issue that's going to be in the news again in the next 6 to 12 months. So the more word we can get out, the more education, the more help we can get people before it's a severe issue. I think the better off we are, the better off the homeowners are, the better off everybody is. So that's kind of my focus. I always come kind of with the bad news because I always work in this foreclosure world. But that's, like I said, much rather get ahead of the problem, prevent the problem from happening, rather than try and fix it after bad things have already happened. And so, that's what I see is coming. And that's where I think that the education and the outreach and getting people as soon as possible is really, really important thing to do. So are there any questions on any of that stuff?
Is the mortgage assistance program extended for Racine and Waukesha too? Is it?
Yes, those programs are through the end of the year. Waukesha is through the end of November. Racine is through the end of the year.
Thank you.
All right. Yeah, I know whenever I speak, I kind of suck the energy out of the room because I always bring the bad stuff. And
It's very
but
Oh, though.
again, I'd much rather people be aware of it now than get hit over the head 12 months from now and really struggle. So I see a question about
I have
water
a question,
bill.
though, not to interrupt.
Yeah, go ahead.
I'm sorry. Oh, can you see me? I'm sorry. I got the slide. Hi. So question as far as because I'm reading your slide. So is there help to help individuals with their water bill if they're behind?
Not direct financial assistance, and water bill. And this is one thing that I try and make sure everyone's aware. Water bill is a killer. If you don't pay the water bill and it ends up on your property tax bill, that causes huge issues. The thing that I stress with everybody, if they're struggling with making the water bill, is the water works will set up repayment plans. And if you're on a repayment plan, it won't be considered delinquent and it won't roll onto the property tax bill. So there's not financial assistance, but preventing it from hitting the tax bill is really, I think, the most important thing, because if you can deal with it in bits and pieces, you're okay. If it hits the tax bill, then it's a lump sum, and then it's going to be dealt with as just one big debt. And if you have a escrow, you're going to see that escrow jump to $300 a month in the next year because of that water bill. So that's what we really stress with water bills is communicate with the waterworks, get on a repayment plan, do what you can to prevent that from hitting the tax bill, because once it hits the tax bill, it's really a big problem.
How does that work when when the water bill is added on to the renter? When they add the water bill onto the rental property where the people are renting, I've had residents that tell me that they have a water bill and the study going, they owe this and they owe that for a water bill, but they're renting, and so they're really having a hard time.
With the rental, I'm not sure, because I mostly work with homeowners. I mean, the water bill generally stays with the property. So
So-
ultimately, I mean, that would be an issue between them and the landlord.
Yeah,
Because if
it
it
has
doesn't get
become an
paid,
issue.
yeah. Because if it doesn't get paid, if it hits the tax bill, it's gonna ultimately be the landlord's problem. So it'd be more of a communication between the renter and the landlord and how that bill needs to be addressed and paid.
Okay, thanks.
Do want to be mindful of time, so I wanted to say thank you, Emmett, and we'll send out your contact information as well to everyone. Should they have any kind of questions, reach out to you.
Yes, directly to me. And then, like I said, I got some new people that are going to be doing the counseling, but I'm still, kind of hands-on, still distributing. So everything should come through me, and then we'll find the correct people to work with it.
Awesome. Well, thank you so much.
Thank you.
And I did want to say, I know some of you may have had an 11:30 sort of strict cutoff. So if you have to, then obviously you can log off. But if you're able to stay, we do have one last presentation from Amy and Joanne of Mediate Milwaukee. So I'll let you both kind of take over the last part of our presentation today.
Thank you. I do have just a few slides. I'll go ahead and try to share here. Okay, so I am Amy Colts. I'm the executive director of Mediate Milwaukee. We also go by Mediate Wisconsin because our foreclosure mediation services do operate throughout the state. And let's see, make sure I can advance these here. There we go. So just generally in terms of the services we have, we focus strictly in the area of housing mediation. So our services do relate to landlord-tenant disputes, really at any point in the tenancy. We kind of distinguish it between pre-filing, we refer to as landlord-tenant mediation, and post-filing, once that eviction case has been filed, is really our eviction prevention mediation. But the program operates in the same fashion in either regard. As neutral mediators, we work with landlords and tenants to try to help improve communication and identify solutions related to whatever matter brought them into mediation. Obviously, with the pandemic, most of what we're seeing is non-payment of rent, creating challenges. So when we work with tenants and landlords, we do help try and identify other resources in the community that could assist in the situation. We are part of a collaborative called the Milwaukee Rental Housing Resource Center. And as part of that, we've partnered with community advocates to help connect tenants to the emergency rental assistance that's come available as part of the pandemic, and really help connect the dots and close any gaps in communication or close the loop in that process, so that if a tenant qualifies, they know what they qualify for, how much, when it's going to be sent out, and communicate that to the landlord as well. In situations where a tenant doesn't qualify for the rental assistance, then we look to other solutions, including any sort of repayment plan, if that's possible, to help them get caught up, or starting to discuss a move-out agreement on terms that are manageable for the tenant and agreeable for the landlord. So with mediation, unlike court, any agreement that's reached is really because it's what the parties have chosen, makes the most sense to them under the circumstances. And also with mediation, unlike court, if the parties can't agree or come to a solution that's workable, they haven't given up any rights, and they can still continue on with the court process if they see that meets their needs better. But really our goal is to work with the parties and try to help avoid preventable evictions. And Joanne and I talk about it all the time. Oftentimes when there are issues between landlords and tenants, communication breaks down. People don't want to engage in a situation that might lead to conflict oftentimes, or people may be overwhelmed and reluctant to communicate, or maybe feel embarrassed. And when parties aren't communicating, a lot of assumptions occur. And we find as neutral mediators stepping in, we can cut through miscommunication, or we cut through wrong assumptions and open those lines of productive communication to find solutions.
I just want to jump in for a second and piggyback on that, and kind of it highlights what Emmett talked about, which is the sooner people start to engage in these methods and processes and resources that can help, as opposed to waiting, is so much, so critically important to helping prevent things from worsening and kind of spiraling out, whether it's a foreclosure or an eviction. It's trying to get people information and resources and open up those lines of help as fast as possible.
Right, and engage productively. So with our foreclosure mediation program, something that's a little bit different is that a homeowner has to be actively in the foreclosure process to be eligible for our program. So it is available to homeowners in Milwaukee County and other surrounding counties we serve with 1 to 4 unit properties. Again, there must be an active foreclosure case, and the parties must agree to participate. So in Milwaukee County, for example, there is a directive in place that requires the plaintiff, which would be the mortgage company, to notify the homeowner that mediation is available at the point they serve the summons and complaint of foreclosure. It is, after that point, a voluntary process. So if the homeowner decides they want to engage in mediation, the mortgage servicer has to agree to do that. But by and large, we do have a high participation and buy-in rate. We work directly through the mortgage company's local attorney to communicate. And a big part of our process is collecting the financial package from the homeowner that the mortgage company needs in order to review for loan modification options. So either we're collecting that directly, or we're encouraging homeowners to work with local housing counseling agencies like HRI or Green Path. Sadly, since the height of the foreclosure crisis, as we all may know, there are far fewer housing counseling agencies and funding for that. So, but it's a really important piece, because that loan modification review process, which Emmett alluded to, is the primary way someone could come current on their property again in an affordable fashion without having to come up with the full past due amount to reinstate. So communication, again, here in this process is really critical, and we do have secure documents portal for the exchange of documents and communication directly with the servicer representative to see what's missing from the package, what needs to be corrected, or how long that review is going to take. And what we find is when homeowners try to navigate the loan modification review process on their own directly with their lender, they feel like they get the runaround with regard to that financial package and are constantly being told things are outdated or missing. And with our involvement, we can streamline that and point out to the mortgage servicer if they do have the documentation or if they've overlooked or missed something. We can also, I feel like we often are serving as a cheerleader for that homeowner that, yes, this is really important. And yes, if you provide this documentation, you will get to the end of this process. And with the mediation session, really help them understand why they did or didn't qualify for that loan modification and what the road ahead looks like with regard to the foreclosure process. So in foreclosure mediation, our mediators, again, are neutral. They're professionals in the area related to housing and foreclosure, and really can ask the types of questions that homeowner may not know to ask in this setting. So there is a fee for foreclosure mediation in Milwaukee County. It is $100 for the homeowners. And really that's in part to help create buy-in to the process and help offset some of our administrative costs, but really that's more covered through our funding. And then just some contact information on how to get in touch with us. Really, our website is the best way to reach us, and landlords and tenants can apply for mediation directly on our website. And then through the foreclosure mediation process, there are direct links to our applications there as well. I can't see the chat, so certainly feel free to ask any questions if you have them at this point. But before that, I do want to, I guess, reiterate, we have the same concern that Emmett expressed with regard to the pipeline of cases that are likely headed for foreclosure, unfortunately. You know, the forbearances have been helpful, but that's really a temporary solution that doesn't address the underlying. So the more that people can access that mortgage assistance program funds, the better.
And one of the things also that might be helpful to know is if you're working with a homeowner who is renting to someone, maybe a duplex or whatever, where there's an issue with utility payments or past due rent and they're impacted by the pandemic, certainly direct them to the community advocates rental assistance application information, because that might help the tenant, which in turn will help the homeowner, because there is this ripple effect, right? They're not getting paid, so they're not covering their expenses, and there's this impact that is far greater than just the individual. So anything we can do to kind of share that information is certainly helpful.